Good morning, friends. My name is Shivam Jadhav, and my roll number is 165, and topic is journal and journal entries. The outlines of the journal entry, accounting, classification of accounting topic is to be covered, entry, journalizing steps, and illustrations. Accounting is often called the language of a business. It is a systematic process of recording and summarizing business transactions. So we can see that the classification of accounting is divided into a personal accounts and impersonal accounts. Personal accounts are divided into natural person account, artificial personal account, and representative account. Real account in impersonal accounts is divided into real accounts and nominal accounts, and real accounts is divided into tangible real accounts and intangible real accounts. The double entry rule for journal entry rule for double entries, personal account types of account. Rule of debit is debit the receiver, and rule of credit is credit the giver. Real accounts, the rule is debit what comes in, credit what goes out. And nominal accounts, debit all expenses and losses, and credit all income and gains. So the journal is an historical record of a business transaction. Journal is primary book for recording day-to-day transaction in a chronological order which they occur. This is called our book for first entry. In general, we can record all business transaction in a financial condition of a business. We can record all financial transaction in a journal. So the journal entry means recording the business transaction in a journal. The transaction is analyzed to determine which account to be debited and which account to be credited. Journal entry shows that which account is debited and which account is credited. In journal entry, there are many entries. The format of a journal is shown as follows. First is date and particulars, then LF, ledger folio, debit amount and credit amount. So the date in the date of transaction which it can take place, then particulars, the name of account which has to be debited and written first, and names of account to be credited. Lastly, in narration we entered. Then a ledger folio, enter the page numbers on which the various accounts appear in the ledger. Then the debit amount, the amount is to be debited. So debit amount is written along with nature of a currency. Then credit amount, the amount is to be credited against the credit amount is written along with nature of the currency. Then journalizing is the process of recording journal entries in the journal. So then journalizing steps, find out what accounts are involved in business transaction. There are journalizing steps. First is find out what accounts are involved in business transaction and ascertain what is the nature of accounts involved. Then third is ascertain the golden rule of debit and credit is applicable, which accounts is to be involved. Then find out which account to be debited and which account to be credited, and record the date of transaction in the date column. Then fifth is record the date of transaction in a date format. There are many steps. Then we can take illustration 1 and we can pass the journal entries. So the journalize following transaction in the books of Mr. Ramakrishna. Date has to be given particulars rupees July 1st. Mr. Ramakrishna started business with cash 2 lakh rupees. So we can see that the journal of the Ramakrishna July 1 date, cash account is to be debited to capital account. Being started business by Mr. Ramakrishna. The 2 lakh is amount to be debited and 2 lakh which amount to be is credited. Then next entry is goods purchase in the cash 20,000. Then second entry is purchase account debit to cash account 20,000 debit to 20,000 credit, and the narration is being purchase of goods in a cash. Then third is he deposited in a bank 40,000 rupees. The third entry is bank account debit to cash account, being deposit of cash into bank 40,000 debit to and 40,000 credit. Then goods sold. Then the goods sold entry is cash account debit to sales account 15,000 debit to and 15,000 credit. Then fifth entry is good purchase from Mr. Kamlesh on credit 25,000. Purchase account debit to Mr. Kamlesh account debit 25,000 and credit 25,000. Then next entry is furniture purchase. Purchase account debit to cash account 18,000 debit and 18,000 credit, and the narration is being purchase of a furniture. Then wages paid 8,000 rupees. The entry is wages account debit to cash account 8,000 is debit and 8,000 is credit, and the narration is being payment of wages in a cash. Interest issue 500 rupees. So the cash account debit to interest account 500 debit and 500 credit, being the narration is being received of interest. Then July 25 cash paid to Mr. Kamlesh. The entry is Mr. Kamlesh account debit to cash account 25,000 debit and 25,000 credit, and the narration is being payment of a credit purchases. Then July 30 we can entry additional capital brought by Mr. Ramkrishna 50,000, being the introduction of additional capital in a business. It is a narration 50,000 debit and 50,000 credit. Then illustration 2 we can see the journalize the following transaction. The question first is Froden started a business with capital of rupees 10,000. The journal entry is cash account debit to capital account 10,000 debit 10,000 credit, and the narration is being the commencement of a business. He started a business with capital 10,000. Then second is he purchased goods from Mohan on credit rupees 2,000. So the entry is purchase account debit to Mohan account 2,000 debit 2,000 credit, being purchase of goods from Mohan on credit. Then third he paid cash to Mohan rupees 1,000. So the entry is Mohan account debit to cash account 1,000 debit 1,000 credit, and the narration is being payment of cash to Mohan. Then fourth entry he sold goods to Suresh rupees 2,000 rupees. So the journal entry is Suresh account debit to sales account 2,000 debit 2,000 credit, being goods sold to Suresh. Then fifth is he received cash from Suresh rupees 3,000. Cash account debit to Suresh account 3,000 3,000, being cash received from Suresh. Then he further purchased goods from Mohan rupees 2,000. The entry is purchase account debit to Mohan account 2,000 debit 2,000 credit, and the narration is being purchases of goods from Mohan. Then he paid cash to Mohan rupees 1,000. So the entry is Mohan account debit to cash account 1,000 debit 1,000 credit, being payment of a cash to Mohan. Then eight entries he further sold goods to Suresh rupees 2,000. So Suresh account debit to sales account 2,000 debit 2,000 credit, and the narration is being goods sold to the Suresh. Then 9 is he received cash from Suresh rupees 1,000. So the cash account debit to Suresh account, being cash received from Suresh 24,000 1,000 and 24,000 1,000 and 1,000. So the total is 24,000 debit and 24,000 credit. Okay, thank you.